Good morning, Paul Georgie from Allendale. It's March 21st, Wednesday morning. Another beautiful day here in Chicago, and markets are mixed here this morning. Corn down slightly, beans up a little, wheat a little lower here as we speak. The main focus, I think, today is what we've seen overnight anyway, is spread adjusting. We've seen the nearby corn lose some ground to the deferred contracts, and same thing in soybeans. And basically some adjusting here before the USDA reports next week. We would expect that we'll see some readjusting here in a few sessions, but mainly on some profit taking, some evening up of positions. The news stories started yesterday with China raising their gasoline prices anywhere from 6 to 7%. That's the first time they've made such a drastic increase in over 3 years. And the trade looks at that as a slowing down of the economy and of the Chinese economy, which impacts commodity usage around the world and traders' attitudes. So that created money flow out of commodities yesterday. We've taken out some key chart points in the grains, in the soybeans, and in the corn, and wouldn't be surprised to see some selling step in again on a bit of a rebound here today as the money flow leaves the market here for a moment. The USDA report coming up here next week is going to be one of the biggest of the year, mainly because it's got the quarterly stocks report. Traders are looking at that. How much corn do we have left in soybeans, and how much adjustment the USDA will need to make on their April supply-demand report. We've also got planting intentions. As Allendale put their numbers out last week at 95 million acres of corn, 74.5 million acres of soybeans, and those are numbers that will be watched very closely as we get into that and get closer to that USDA report on the 30th, a week from Friday. So expect some two-sided trade. We expect that in the corn, especially, any kind of setbacks in here in the old crop corn will be well supported as end users will come in and make some purchases. In the new crop, we think that rallies will be met with some selling pressure, and as the traders will be focused again on the report a week from Friday, and then weather patterns will be followed very closely, as are we going to have enough rain, and how much corn is going to be planted early. Will there be some frost here between now and the middle of May? So those are things that are going to keep us very volatile, and the reasons to stay in touch with Allendale's research. In the livestock markets, the beef cutout values gave back some of their Monday's rally. Choice was down 65, Select down 4 cents. Cash markets still at a standstill, thinking that there's a good chance that we can trade somewhere around this 123, 124 area here this week. Not much of interest yet seen by the packers. Offers are still at that 126, 127 area. Pork cutouts dropped sharply yesterday, down 158. That was a 14-month low in the pork product. And we've seen selling pressure in the futures, and overnight we've seen more selling here. We took out some key chart support yesterday, and we're getting more selling here from funds and liquidation from longs that have been hoping for this market to turn higher. So still looking for a seasonal low in the hogs. We would be patient and continue to watch here for a few more days. Cattle on feed report out on Friday. Averages are about 102 on feed, placed at the 102, 102 and a half range on average, and marketing's 100 to 100.5 is pretty much the average there. So some things coming up here, but expect some very choppy markets. We've also want to remind everybody that we do have a spring planting special that we've got for the Allendale Research Center, 6 months for only $99. You can get that by going right to the website, clicking on the the link and sign up online, or just give us a call and we'll get it all taken care of for you. So have a great day. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.